everybody, Brian from Bearable Traders here. It's the weekend, Sunday, July 17th, and of course this is the weekend video. We'll go over what happened last week, and then we'll take a look a week ahead and see what we got coming. There's lots of earnings on deck here, so let's get down to it. And starting out with a quick look at last week's price action, the week of July 11th. You know, the markets did continue to find support around the levels they're at right now. Fed Governor Waller came out Thursday. He was talking about favoring a 0.75 rate hike, although he did say 1% was not off the table. But I think the markets took that as a bit of a positive and started to rally back. And then the markets really rallied back on Friday after we had a strong retail sales number, maybe some cooling of inflation indications. So the market took that as a positive, and we still ended up down on the week, but we were well off the lows of the week for sure. You can see there the Dow was only down fractionally, and the IWM, of course, performed the worst, 1.42%, but still not a bad end to the week when you consider how much we were down earlier in the week. Areas of strength and weakness here, the areas that were weakest, of course, communication, basic materials, energy and basic materials mostly down, primarily on this strong dollar. They continue to put pressure on that, and energy, of course, recession fears. Consumer staples were the strongest, and utilities, they were still down on the week, but just slightly. So you can see there the defensive still most attractive to investors and traders. The 10-year Treasury dropped below 3%, while the 2 was higher at 3.13. Of course, this is called an inversion of the yield curve. It's what's happened when they think they're going to have higher rates to fight inflation. But in the longer term, there is a possibility of recession, and so rates will again get cut. So that's sort of the bond market telling you maybe they're pricing in a recession. And the US dollar, as I mentioned, up 1% on the week again, but it is really looking extended, a little toppy, and I think it's probably going to have, if nothing else, a bit of a pullback here. Bitcoin, really volatile on the week. Again, it's just trading like a risk asset. It dropped below 20,000 and then jumped back up again. So that was kind of the week in review. Let's go on and take a look at some charts. And before we start looking at some specific charts here, as always, quick ad for my book on Amazon. The new one, Profiting as an Active Trader. It was published just recently, a month or so ago. So there it is on Amazon if you're interested. So let's take a look at some charts now, starting out with some of the treasuries. So as I mentioned already, the 2-year seem to just hang in there just above 3%, and the 10-year was down. So now we've inverted. The Euclid, talked about that already, so you can see what's happening there. But the 10-year does look a little weak here. We'll see what happens next week. Again, these charts are going to look a lot alike here. We've had a sell-off during the week, had a nice comeback on Friday, and again the transports seem to be putting in some kind of a double bottom or a triple bottom here, whatever you want to call it, but we are just sort of holding in this range right now. Some of the momentum indicators seem to be turning back up here, which might be a positive sign. And again, we've got some earnings coming up, lots of earnings coming up in the next couple of weeks, so that may have an impact on what direction we take for the rest of the month and into the fall here. So you can see again the transport's down a little on the week, but again really just holding a range here. The Dow, nice comeback Thursday as I mentioned, and then nice pop up Friday. We did break through this one shorter term area of resistance on this trend line, and really nice big move on Friday there on that retail sales number. Again, finished kind of flat on the week, just down a hair. Again, sort of same comment with the Qs. We are just chopping in a range here. This sort of 270, this 275 level right down here, this bottom, and then we made a we've been making a series of higher lows here. So, again, this is looking relatively positive. Stochastics are turning up again. really RSI is just hanging around this 50 level. So again, we just seem to be churning here, and there's your level of somewhere around 295 to 300 would be a really break above that level would certainly be positive. And again, the Q is down a little bit on the week, but well off the lows of the week. So again, a positive ending for the week, even though we did finish red. SPY again, kind of just churning in a range here. After this big sell-off, again, we are just holding sort of in a very narrow range here, looking for a break one way or another, which may not come for quite a while. We may just churn along here as we make our way through earnings. And IWM, again, same comments, just trading range bound right now. Again, series of sort of higher lows. That's always a positive. And then if we have this sort of making this ascending triangle, this is an area to watch for a breakout, like a lot of these indexes here. Breakout to the upside. And you can see here again the fear index. We've broken this upward sloping trend line. So you can see here again, there's just no fear in the market of a big sell-off. So this is sort of bolstering the argument. You could say that this bottoming pattern we're seeing could be getting ready for making a break higher. The dollar, I mentioned that earlier, it really went parabolic here, a couple of big gaps, another big gap up here, but then a reversing candle, and again down on Friday, and it certainly looks like we might be pulling back and doing a little bit of consolidation here. But the underlying reason why the dollar's been going up, which is weak euro and weak yen, the weakness in the European economy is still there, although I know they're talking about raising interest rates, which may help to support the euro, which is a significant part of this index, and which could, of course, put some downward pressure on the dollar. The Bitcoin, again, really just, again, it's just sort of chopping in a range here. Drops below 20,000, comes back up here and sort of throwing an indecision candle on the week. And yeah, so that's Bitcoin. It's really not sort of like the rest of the market's just sort of consolidating at this point. And finishing up with some stocks we've got on watch for next week coming up. Of course, earnings season. Always cautious about holding stocks through earnings reports. Really don't like to do that just because it can be so volatile. Anyway, we've got Apple. Apple looks quite interesting. It's sitting right at some area here that's been prior support and now resistance here, and it's come right back up to this sort of 150, 151 area. And it'll be interesting to see next week if it actually can break out. It does report, but not for another week or two. I think right at the end of the month it's reporting. So again, keeping an eye on that. But thinking if it does break out here, 155 could be an area that it might manage to get to. 158, obviously, the 200-day moving average. Volume has been not too bad, and all the momentum indicators seem to indicate it wants to go higher here, and it'll probably track with the rest of the market. Amazon's really just stuck in a range here, so this is an example of maybe a good options trade, selling some calls up here and some puts down here, and then just let it churn in the range and then collect the premium at the end of the month. But again, it just seems to be kind of stuck here in this range right now. Baba's interesting. It's obviously it took a big fine. There was a big fine that was levied against it, anti-competition fine, I believe it was, and of course the Chinese stocks again getting taken to the woodshed because of actions of the government there. So it did rally quite strongly off the bottom here on Friday, even though it did finish in the red and the rest of the market finished in the green. So I think there's a possibility that there could be more downside here, although this 200-day, or not the 200-day, this 50 MA is looking like support. But I think we're going to lose 100 here and could easily go down to 95, really, and even 90 in the shorter term here. Bobbin not looking as great. Here's another example of maybe a possible options trade for next week. We'll be looking at that. We had a big pop-up with Citi on their earnings report and had a nice move up. So if there's more strength on Monday, I'll be looking at where that strength runs out and looking to sell calls. So for example, if it gets up to 52 here and then starts to roll over, it may indicate that the top's been kind of put in there, so you could sell either a 52 call or a 54 call if you wanted to be more conservative, because 54 is definitely an area that would see some resistance there. So possibility for an options trade there, collecting premium. Charge point, unfortunately, it broke below 12, so I had to stop out of it. Again, I think it was trading positively on this Build Back Better bill that hopefully the Democrats were going to get through, but it looks like that's kind of maybe dead on arrival with one of the Democratic senators in West Virginia has been crapping on any kind of Build Back Better bill now. So I don't think this charge point was probably counting on a lot of charging stations being built as part of that bill. So it's kind of dead. Ford, again, kind of like leaps here for that's a longer term option, maybe like 2023. But it's really, Ford is just so cheap right here at 5.5 times price to earnings. And I think it could easily rally back as we get into the back end of the year here. IWM, again, I think is reporting this week. It seems to be making a bit of a pennant here, so we'll be watching to see which way that breaks. USO, I think this dollar or the oil is going to rally. It already is, I believe. Some of the markets here, it's probably going to rally on the weekend, or next week, I should say, as the market opens up. I think basically the presidential visit really didn't yield any sort of new source of increased oil production initially, so I think that's why oil is probably going to rally on Monday here. And of course, it'll take the energy stocks up with it. XLK is still looking pretty good here. These growth stocks should be doing okay. So you've got a series of higher lows, just like the indexes. We are into an area that's sort of been prior resistance here, right here and right here. So this 50 moving average, if we can break out of that, could easily get up to sort of one. In somewhere in this area, 138 maybe, and maybe rally higher. I'm still holding some, this was a position I had last week. We got it at around 129. It sold off pretty significantly, but it came back up on some pretty good earnings from UNH, United Health, and I still think this has some potential to rally higher. We bounced off this prior level of support here, so a little bit of a head and shoulders pattern. And hoping next week we can see a break of this 132 area. And if we do, I'll be looking to add on that one. And that's about it. And wrapping things up for the week ahead, July 18th, just some areas to keep in mind for support and resistance on the various indexes. You can see where we are now. We're pretty much sort of in the mid-range, again, just sort of churning along, and sort of a fight between, is there going to be a recession, is inflation going to cool? So it's, yeah, again, we're just kind of churning here. The economic events, we've got some housing stuff coming out Tuesday and Wednesday, should be interesting because housing does drive a lot of the economy, so we'll see what comes out of that. And we've got the Philly Fed Manufacturing Index coming out on Thursday. Some indication on how manufacturing doing. And of course, as I've been mentioning, we've got lots of earnings coming up this week. You can see there a list, but some of the more interesting ones, of course, Netflix on Tuesday, been under a lot of pressure. This whole streaming services have been under a lot of pressure. And Tesla on Wednesday, of course, and their partnered Twitter on Friday. Tesla and Twitter seem to be tired right now with Musk's involvement, and a lot of other ones, some airlines, some Snap, some gambling stocks, material sector, Alcoa. We've got a UAL, United Airlines, and Halliburton. So we got quite a mix here going on, J&J, and just a couple more banks here. So should be an interesting week ahead. Good time to be playing options. So we'll be looking at some options trades, and that's about it. Have a great rest of the weekend, everybody. And 8:30 in the morning will be a pre-market show. 8 o'clock we'll start out, and live on YouTube, doing some market review, and yeah, trading the market open with our members at 9:30. Again, hopefully we will see you at one or all of those events. Bye for now.